Welcome to Dorchester Advisors. Thanks for joining me for this quick market update about the fourth quarter of 25. I think you'll get some interesting insights. In case we haven't met before, my name is Dushyant and I'm the founder and managing director of Dorchester Advisors. Here, we work with individuals and families to build solid retirement portfolios that are capable of providing them with enough money to sustain their lifestyle throughout retirement. The fourth quarter of 25 marked a strong finish to a very good year, despite a turbulent start to the year. All the five major classes, cash, bonds, equities, real estate, and commodities, ended the year on a positive note. The non-US equities led the way, followed closely by US equities. Other asset classes like commodities also delivered strong returns, and REITs, real estate investment trusts, though positive, were the laggards. Now, this reinforces our core belief that properly diversified portfolios play a critical role in preserving and growing wealth. So even though 2025 ended well for US equities, it was not without volatility. You'll recall earlier in the year, we experienced an intra-year decline of 19%. Now that's a significant number, but it's not unusual. The average decline over the years, intra-year, is about 14%. And even in markets that end well, the intra-year decline can be as much as 11% on average. So this really underscores the reality that volatility is an integral part of investing. Now, many investors try to time the market to avoid volatility. This is emotionally satisfying, but it's futile and often causes financial harm. So for that reason, our approach is to be disciplined, structured, and take a long-term view of things. Now, as we look ahead to 2026, forecasting short-term market performance becomes very difficult, especially after 3 strong years. A common emotional reaction from investors is, hey, the market's high, so they must go down. That may eventually happen, but no one can reliably predict when that will happen, by how much, and for how long. And without that information, maintaining a disciplined approach and staying the course is the more prudent path. That remains our plan, unless conditions change in a way that warrant reassessment. And that is why we monitor markets continuously, but act infrequently. Now, there's always the possibility of an unexpected headline event. But these surprises cannot be reliably forecast and should not be a primary concern for investors with well-structured long-term portfolios designed to withstand periods of market stress. Our clients typically have multi-year time horizons. After all, a typical retirement could be 20 to 25 years. With that perspective, an equity-biased portfolio continues to make sense. At the same time, we protect near-term cash needs that our clients might have by allocating a portion of their portfolio to safer investments. Today, our portfolios are well diversified across the major classes. In the equity portion, they are well diversified across hundreds of leading global companies, across sectors, across regions, and across size, from small companies to mega cap companies, because no one knows where future returns might come from. Our portfolios will move with the markets, but we believe that as the global markets continue to expand, so will the portfolios. Our investment philosophy is simple. Sensible, prudent, and cost-conscious portfolios work well. This approach has served investors across many market cycles, and we believe it remains well suited for the years ahead. Now, if you're a client, thank you for the trust you place in us. If you're considering working with us and would like to discuss how our philosophy might suit your situation, give me a call. I can help you think through your long-term goals with clarity and discipline, because after all, the investment strategy you pick should be suited to your situation. Hey, thanks again for watching. I invite you to look through our website, and if our philosophy and approach resonate with you, give me a call without obligation. I love talking all things investing.